to this committee for hearing these important bills on a Saturday. It's remarkable, the legislation that is being put forth and approved by this committee, and I'd like to commend everybody. 132 before this committee. It amends the Small Loan Act and the Bank Installment Loan Act of 1959, and it reduces basically the percentage rate on these small loans from 175% to 36%. It increases the loan amount, excuse me, from $5,000 to $10,000, and it really puts some anti-evasion measures in so that people can't get around these percentage rates. That's basically what the bill does. And I think most people here know that many people have tried to put this legislation before this body for many years. I presented it, a bill in 2019 and again in 2021. In 2019, it got before 2 committees and died before going to the floor. In 2021, we had an amendment. We brought it to the floor, and it actually passed in a bipartisan vote by, I think it was 52 to 16. The Senate refused to take a compromise, and therefore it died before going to a concurrence meeting. And so I'm back here again. Sometimes I feel like I think it was Sisyphus, that Greek mythology character who, was condemned forever to push a rock up a hill, only to have it roll down again. But third time may be the charm. So I'm going with that thought this morning, Madam Chair. So I just want to go back and say that it was interesting in 2019 when I was a brand new legislator. I told, we had a big class that year, it was about 20 of us elected. And I told freshman legislators that I was going to try and change this from 175 to 36. And they all said, why so high? Why would you do it at 36 and not 15%? And I told them that I went with 36%, and many supporters of this legislation went with 36%, because that's the interest rate that the Department of Defense, through the Military Lending Act, allows small loan companies to charge young men and women who are in the military. When military personnel get trapped in these high interest loans, they can't be deployed. So it was really a response to military readiness. We had to protect these young people. And so they introduced an act, and it was passed in Congress in 2006 as a way to prevent abusive loan rates and to prevent young families in our military. I agree. I think New Mexico should do the same. Right now, we have about 15 states that have adopted rates at a 36% cap. We have 2 that are at 37 and 38. And this includes our neighbors to the west and to the north. Both Colorado and Arizona have adopted 36% cap rates. When I first began to think about introducing this bill, it didn't really seem like a heavy lift at all. I thought most people would say, yeah, 36, why wouldn't we do that? Why wouldn't we go along with the military defense? Why wouldn't we agree with that? I then found out we have an entire sub-industry in this state to counter these abusive loan rates. We have, there's over like 30 major counties, cities, and colleges that have set up departments within their financial departments so that they can help people get out of these crippling loan rates. It's really not a problem. This is really a financial epidemic. And I want to say that in about 2000, probably 18, and I should have the date, but I'm sorry, we did pass legislation in this body and in this House and Senate so that we could really study the effects of these loan rates. And the superintendent of insurance is charged every year with coming out with a report from the Financial Institutions Division and to really say what's happening. What's happening to people, how many people are taking out these loans, what are the rates, what are the charge rates? And I'd just like to say, when I looked at this year's report, It was very sobering. It's very sobering. And I would encourage all of you to go to their website, pull that down. It was about 390,000 loans were taken out. Excuse me. And the amount was 179 million in loans were taken out. When I was here late one night and I was just started doing the math on that, I was just curious about what percentage of the population that are really taking out these loans, and the longer I did the math, the sadder I got, really. And I did the math, and then I realized I was doing it the wrong way. I was counting everybody in the population. We went back and we looked at populations of 18 and over in every county. I did the math again. And I can tell you that 16 out of 33 counties in this state have over 20% of people making these loans. That's how many loans people are taking out. And if you look at the percentages of the adult population taking out these loans, my gosh, in McKinley County, it's 136%. That means people take out more than one loan. In San Juan, it's 51%. I am telling you, this is an epidemic. And it's not that we want to close down loans for everybody. We don't. We know people desperately need these loans. We get that. We just want to lower this interest rate to 36%, like other states and other leadership have done. Opponents of this bill will say that these loan installment companies are needed small businesses and they serve an important role. They're a local business hiring about 450 people and serve a great need. And I want to make this clear. I don't think all loan companies are bad. And I do think they serve a great need. I do know that. I have talked to people on both the sides of the aisle, on both the right and the left. I've met with people. I've tried to do due diligence to give everybody, certainly a fair play. So just let me go over some things that happen here. There are 550 small loan companies in New Mexico. Approximately 89% are out-of-state corporations. Okay, so that means 10% of these are local loan installment companies. 78 of these out-of-state corporate storefronts had an enforcement and supervisory regulatory action against them by something called the Federal Consumer Financial Protection Bureau, the CFPB, and they continue to operate in New Mexico. In June of 2018, the CFPB, they administered enforcement action against these companies for improper debt collection that violated federal law. I just want to read a bit of this so that you understand kind of what the worst companies can do. And I'm talking about the worst companies. I'm not talking about all of them, but it is harrowing, really. Security Finance made improper collection efforts to collect delinquent debts, including physically preventing borrowers from leaving their homes, visiting and calling borrowers' place of work, while knowing that this contact could threaten their employment. They violated the Fair Credit Reporting Act by regularly providing inaccurate and incomplete information about borrowers to credit reporting agencies, thus potentially adversely impacting their credit scores. Security Finance was ordered to cease illegal collection practices and correct inaccurate information provided to the consumer reporting agencies. Security Finance was ordered to pay $5 million in civil penalties. TitleMax was ordered to pay $9 million in civil penalties. Ace Cash Express was ordered to pay $5 million in refund to borrowers and $5 million in civil penalties. Opponents of this bill will tell you that this business is a high-risk business and they need high rates to recover costs. They do charge higher rates, but I don't think we need to charge a rate of 175%. And just so that you know, let me just turn to the FID report, because this is important information that you should know. About 5% of the loans. 5% of the loans were, I'm sorry, I had this and Oh, here it is. 5% of the installment loans were at APR rates less than or equal to 36%. 35% of all the installment loans were less than or equal to 100%. 34% of the installment loans were made by lenders who offer loans between 150 and 175%. That's taking advantage of that highest rate that we have in this state. So I just want everybody to understand this. To compound this situation, the level 2 literacy rate in New Mexico is 46%. So that means that almost 1/2 of our population is unable to do simple math. That means most people who sign these loans don't even know what they're signing. It's a perfect storm created by out-of-state corporations. And I also want to point to just a recent study that was completed in December of 2021. This was done by BSP Research. They worked with Voices for Children, and Cafe. A lot of our Somos un Pueblo Unidos, they were curious about what happened to our Hispanic population during COVID. You know, really what impact did this have? For those of you who don't know, 48% of New Mexico's population is Hispanic. Certainly in the north, we have a much higher percentage. So I look at these numbers to see how people are impacted. 26% of Hispanics across the state earn less than $20,000 in 2020. And this was done the study was completed December 2021. 60% have $1,000 or less in savings, and 35% have less than $100 in savings. 25% of the Hispanic population lost a member to COVID-19.
Representative, I hate to interrupt you, but if you would like to save some of that great information for questions.
Okay. I will do that.
Glad to ask you a lot of those things. But,
Perfect.
And would you like Representative Garrett to say a few words?
Well, and I would like my, let me just, if I could just close up a little bit. I think it's important to understand that I'm not trying to close down these businesses. We're just trying to get them to lower their rates to 36%. I don't know, Madam Chair. I know this has been a long hearing for you. I would love to have my expert witness, Karen Myers, just make a few statements about what others have happened in other states, and then recognize Joe Garrett, if that's all right, Madam Chair.
Yes.
Madam Chair, members of the committee, thank you very much for inviting me to present this morning. I want to first thank Representative Herrera, Speaker Egoff, and Representative Garrett and the other sponsors for moving this bill forward. Let me introduce myself very briefly. I am a consumer lawyer in Albuquerque. I was the head of the Consumer Protection Division at the New Mexico Attorney General's Office for 8 years under Attorney General King. I worked at the CFPB that Representative Herrera just cited to for a number of years on related issues. And I most recently worked with the city of Albuquerque to set up a consumer protection initiative in Albuquerque. In my work around lending, I've interviewed borrowers and heard their stories about the impact of high-cost loans on their lives. And I've reviewed numerous loan files to better understand the practices of lenders. And it's because of the borrowers with whom I've talked that I strongly urge you to pass House Bill 132. As many legislators are aware, each year, as Representative Herrera noted, FID does a data report. There's a number of things that have been previously presented to committees that have now been substantiated by that report. And I'll just address a few of those. The legislature has been told that loans in New Mexico are made to borrowers who are unable to pay the loan on the terms of the loan when made, which leads to refinancing or reborrowing when payments due cannot be met, This is what leads to what people call the debt trap. FID data shows that only 14% of loans of all installment paid in full without refinancing or reborrowing, and only 23% of all installment borrowers were able to pay off their loan without refinancing or reborrowing in 2020. We have previously presented testimony that borrowers pay high fees and costs when the annual interest rate is 175%. As stated, borrowers are paying close to $180 million in interest between installment fees and interest and refund anticipation loan interest. And we've talked about the adverse impact on low income and fixed income households. FID data supports and substantiates that, because we see that 18% of all installment borrowers are over the age of 65. And New Mexico, unfortunately, has the highest rate of poverty for people living who are over 65, who are living in poverty. In New Mexico, it's 13.5%, whereas nationwide, it's 9.4%. We also know that 51% of all borrowers took out a refund anticipation loan who also get EITC, the Earned Income Tax Credit. So that shifts the benefit of that income lifting program to benefit the lenders. Outside of New Mexico, we have many lessons about other states that have changed their lending to have a 36% rate, which makes loans affordable and safer. For example, in Nebraska, they enacted 36%, Illinois, Montana, South Dakota, just for a few examples. Illinois is the most recent state, which let me talk briefly about what they've seen. They enacted it about a year ago. And as of most recently, and I checked their data, they still have 500 lenders listed on their licensee list who are making these loans. And interestingly enough, 67 new lenders opened business in Illinois after the loan went into effect, which counters the argument that everyone will leave the state and there will be no loans available. Also in Illinois, they have a community development financial institution, a CDFI, that saw a 70% increase in loan applications from new borrowers. In South Dakota, they did a study. They passed their law in 2016. They did a study in 2020 using focus groups of borrowers to see how they felt about the 36% rate. They found strong support for keeping the rate at 36% and for keeping high-cost lenders out of the state. And they found that they were still available credit to South Dakotans, including upticks in the use of credit unions. This demonstrates that borrowers will seek alternative lending options and that alternative lending options can exist in a state which has a 36% annual interest rate. I am more than willing to answer any questions about the data, about the bill itself, but I will close by just urging you to vote a do pass on House Bill 132.
Thank you. And Representative Garrett, we are running short on time, so if you'd just like to say a few words.
Madam Chairwoman, 40 seconds, time me. I started researching this when my son as a 20-year-old took out a $200 loan that turned into $600. So that's probably everybody on this panel knows someone or has a relative too embarrassed to share their experience. I just want to point out there's a $180,000 appropriation that goes to PED to prepare curriculum on financial literacy and training. Thank you so much. That's it.
Thank you. Representative Herrera, do you want to explain your, do you have your amendment?
Yes, and I hate to tell Joy Garrett this, but I have an amendment to that really takes out the appropriation. So on page 1, it says strike the line making an appropriation. On page 42, it strikes lines 1 through 6, and then it renumbers the numbers accordingly. And that is my amendment, Madam Chair.
Okay, do we have a motion on the amendment?
Madam Chair, I make a motion to move the amendment and accept it.
I'll
Thank
second.
you. Okay, are there any objections? Okay, so moved. We will, your bill has been amended. And just to clarify, it's 0.222312.1. Okay. So let's go to the audience and take a poll. Those in favor and those opposed? Okay, we have 43 in favor, and, or is that 49? 49, thank you, and 21 in opposition. We are going to have to limit, okay, let's go to the audience. And those in opposition, who would like to go ahead and speak, even though we know that we've registered through the survey that there are 21 in opposition and 49 in favor. But those of you who would like to speak, we're going to have to limit it to 1 minute and to half an hour each side. So if you can speak very briefly and not repeat what someone else has said, but just voice that you're in favor or opposed briefly, that will help us get through this portion. So let's go ahead and do those in opposition first. If you will raise your hand, those in opposition to House Bill 132.
Ricky Keys.
Madam Chair, can you hear me?
Yes, we can hear you.
I'll be quick. Madam Chair, members of the committee, my name is Dr. Ricky Keys. According to Bankrate.com, 63% of Americans didn't have access to $500 to address a household emergency. This is the equivalent of 1.3 million New Mexicans. Unfortunately, New Mexico already has one of the highest poverty rates in the country, and the inability to access mainstream forms of credit will make an already bad situation worse. While some believe that debt is a more significant issue, I believe that for hundreds of years, ordinary consumers have used debt to escape poverty. My story, and millions like me, is one of using debt to finance my education, purchase a home, address short-term emergencies, and perform other essential functions. Unlike others, accessing needed resources through family and friends is not an option for me and thousands of New Mexico residents. I've spent all of my career working with organizations like NBCSL, NHCSL, Nobel Women, African American Pastors, local branches of the NAACP, amongst others, to ensure equitable access to needed resources.
I'm sorry, your time has lapsed. Next.
David Emery.
Good afternoon, Madam Chairman, members of the committee. My name is David Emery. I'm the New Mexico Regional Manager for QC Financial Services. Now, if I could please share an example with you. We have a customer named Andrew. He's a single father who has recently divorced. Andrew found himself in a position where he needed purchase some specialized medical equipment for his daughter and replace a hot water heater in his home. Andrew thought he had an ace in the hole. He thought he'd be able to borrow money easily. But when he was unsuccessful in his attempt to borrow money from his employer, who, by the way, is a major bank in the metro area, Andrew turned to us, and we were successful in helping Andrew. Now, if Andrew isn't able to borrow money from the bank, being an employee of the bank, just imagine how difficult it must be for our fellow New Mexicans in these types of situations. We understand it's important that New Mexico needs to be cleaned up and rein in rogue actors, but it's important that people like Andrew have a safe, efficient, and practical way to have their needs met. We at QC welcome the opportunity in regards to having a conversation about future regulations. Thank you for your time today.
Thank you. Next.
Joseph Rubin.
Hey, good afternoon, Madam Chair and members of the committee, and thank you, Representative Herrera. My name is Joe Rubin. I'm here on behalf of Opportunity Financial. There's clear evidence from other states, unlike Karen Meyer's statement, that lenders who promise to fill the gap left by a rate cap do not do so. They don't change their underwriting criteria, and they don't change their lending standards to meet the needs of credit-challenged consumers. For example, even here in New Mexico, over the last year, we've been talking about this, and credit unions have said they would fill the gap. We've seen no evidence whatsoever that they have stepped up, that they have increased their lending, or that they have reached out to consumers that need help. Also in California, when California adopted a rate cap, we saw the number of installment loans drop to almost zero, yet the balance was made up by predatory payday loans and by tribal loans, which skyrocketed in California. And in Illinois, we see the same thing. In fact, the Woodstock Institute is warning that there are now illegal lenders that folks have to worry about because they're the only ones that are making those loans. Thank you.
Next.
Danielle Fagre Arlo.
Okay, I think I'm unmuted. Thank you, Madam Chair and members of the committee. I'm Danielle Fagre Arlo, Senior Vice President of the American Financial Services Association. AFS has been around for over 100 years. Our members are both bank and non-bank in all areas of consumer credit. We do not represent payday lenders, title lenders, or credit unions. While borrowers in New Mexico, in New Mexico's elite will be able to find other sources of credit or afford larger loans, lower income individuals will likely be left in credit deserts if HB 132 is to pass. In a letter to the Senate Banking Committee this summer, the two national credit union associations said a 36% all-in cap encourages borrowers to take on more debt, or for many borrowers with lower credit worthiness, pushes them out of the market for small dollar credit altogether. Madam Chair, everybody knows you cannot break even on 36% below about $2,500. The US Federal Reserve under the Obama administration said the same thing. This bill, if passed, will be the most extreme law in the country. Thank you.
Tony Tanner.
Madam Chair, members of the committee, good afternoon. I'm Tony Tanner, owner of Tancourt Finance. We're a small New Mexico family-owned business offering refund anticipation loans in Gallup and Farmington since 1989, 30 plus years. I appreciate the opportunity to address the committee members today. We're optimistic that the industry and consumer advocates can work together with the legislature to fashion a solution for all, ensuring access to a stable, regulated industry within New Mexico to assist residents in difficult times. Madam Chair, members of the committee, respectfully, we cannot support House Bill 132 as presented. Thank you.
Drew Setter.
Thank you, Madam Chairman, members of the committee. My name is Drew Setter, and on behalf of the Online Lenders Alliance, I want to express my appreciation to the sponsor for a dialogue on this legislation. We hope to find some common ground on how to address the sponsor's concerns, yet still provide access to credit for those in need. Regretfully, as currently drafted, the OLA cannot support HB 132. The legislation will leave a great many New Mexico residents without access to credit at a time of financial uncertainty. In a recent survey of OLE members, we found that more than 30% of customers in New Mexico already had either a savings or checking account at credit unions. In other words, credit unions already have access to many consumers using short-term or small dollar loans. It is unclear how a rate cap will help credit unions provide services to those denied access under the bill when they do not do so now. Furthermore, HB 132 will impede how banks market their loan portfolios. Federal law protects the independence of both national and state chartered banks. We hope to continue our discussions with the sponsor to find a solution that will curb the abuse of bad actors and still provide access to lending for those that truly need it. Thank you.
Next.
Raymond Sanchez.
Madam Chair, can you hear me?
Yes, we can hear you.
I apologize. Madam Chair, my name is Raymond Sanchez. I'm representing SELA, which is not affiliated with payday loans. SELA has provided New Mexico consumers with safe, affordable, and closed installment loans under the New Mexico Bank Act of 59 since 1966. We comply with Fair Credit Reporting and Federal Truth in Lending Act. It's already been stated about the number of New Mexicans who are in poverty. We have committed and we have tried to work with members who have proposed legislation and with the sponsor herself in an effort to try to make this a reasoned piece of legislation. I have personally spoken to members of the House. I have texted and emailed several members. Many have responded, some have not. I would like to continue this dialogue. We are anxious to put something together and work with the sponsor of this bill, and we thank her for her efforts and we actually thank her for having taken time to visit with us. Thank you, Madam Chair, members of this committee, and Madam Chair Herrera.
Thank you. Next.
Deborah Reyes.
Madam Chair and members of the committee, my name is Deborah Reyes. I represent Curo Financial Technologies Corporation. We are a licensed regulated lender offering online installment loans to New Mexico consumers under the brand name Speedy Cash. I'm speaking in opposition to House Bill 132. I'd like to share with the committee the following data points relative to the Speedy Cash New Mexico customers. Nearly 30% of our New Mexico customer banks at a New Mexico credit union. Of that 30%, nearly 1/2 bank at one of the 19 credit unions that offer lower cost alternative loans. This begs the question, why are our Speedy Cash customers coming to us for credit rather than their own credit union? Could it be that they've been denied credit by their credit union, or perhaps those lower rate loans are not nearly as widely available as advertised? Whatever the reason, I can say with certainty that House Bill 132 will result in the immediately withdrawal of our installment loan product from the New Mexico market and result in the denial of credit to New Mexico consumers. Thank you, Madam Chair.
Thank you. Next.
Dan Najjar.
Madam Chair, can you hear me?
Yes, we can.
Thank you. My name is Dan Najjar and I represent Access Financial. Access respectfully opposes House Bill 132, but this should not be interpreted as defending the status quo. We recognize that change is necessary. We have spent the last year meeting with consumer advocates and government officials to explain our financial model. Representative Herrera graciously met with us several times. We did not stop there, though. We also spent the year implementing a model in Illinois at the 36% rate that would be required by this bill. Our experience was that we had an 800% increase in customers as other lenders left the market, and we incurred enormous and staggering losses. Our efforts to serve customers with poor or low credit ratings below 620 FICO scores failed. This is a complex issue, and we continue to urge the stakeholders to come together and make a good faith effort to find a resolution that protects consumers without denying access to credit. Thank you.
That was the final public comment in opposition, Madam Chair.
Thank you. Now those in opposition will lower their hands, and then those who are in support, Please be brief. We have limited time, and go ahead and raise your hands if you're in support. But we are limiting it to, I'm going to have to change it and make it to 15, 20 minutes.
First, we have comments from people in physical attendance in the committee room.
Go ahead.
Madam Chair, I'm Alexis Johnson. I'm a citizen. I'm just here on my own behalf. I'm here mostly to commend you and the work of the committee and the sponsors on this bill for moving something that certainly is, in the estimation of many, long overdue. I do hear and hear some encouraging sounds from those who are in opposition if they're saying they're intending to work really hard to find ways to make numbers work. I think the first test, if New Mexico is going to go to financial literacy for its citizens, it can start in the roundhouse with the legislators. And I think they can work hard on the numbers too. And I think do it in good faith. I think I heard that enough to say good faith efforts will get some good faith literacy from the public fiduciaries, which is the legislature itself, who safeguard New Mexico and New Mexicans above all else. I would urge that that happen, that people work hard. There will be other remedies potential later, maybe other hearings in other years, but it's long overdue for New Mexico, as we can hear. Thank you.
Thank you. Next.
David Jaramillo.
Yes, I guess it's afternoon. Good afternoon, Madam Chair, members of the committee. David Jaramillo, registered lobbyist for the city of Albuquerque. I want to thank Representative Herrera, Ms. Myers, and the other sponsors of this important legislation for their multi-year effort to get New Mexico into a rational position with respect to its citizens and its citizens' access to credit. 5 states have no cap. Only one other state has a cap higher than New Mexico, despite the fact that New Mexico continues to be among the poorest states. What that tells us is that we have a large population who are victimized by predatory lending and high interest rates. And this bill is a positive step in getting New Mexico in line with the vast majority of states that have taken action to protect their consumers, protect their citizens, and get access to credit for those folks. It's working. Please move this bill forward. Thank you.
Thank you. Next.
Karen Whitlock.
Madam Chair, members of the committee, Karen Whitlock with the National Association of Social Workers, New Mexico chapter. And for all the reasons stated, we stand in strong support of this legislation. Thank you.
Rennie Ashelman.
Madam Chairman, members of the committee, this is Rennie Ashelman. I'm with the League of Women Voters of New Mexico. In 2017, we did a study on this issue. Not much has changed since then, and I'm happy to tell the sponsor and others who are looking at this bill that it meets all of our major criteria that we found for a good bill in this area from our study. And we also support it for the reasons the other supporters have given, and as have the sponsors and their experts. Thank you very much.
You're muted, ma'am. Bill Jordan.
Thank you, Madam Chair and members of the committee. I'm Bill Jordan with New Mexico Voices for Children. And I also want to thank the sponsors who I know have worked very hard and very long on this issue. I know you're aware that New Mexico has one of the highest rates of poverty in the nation. We can save New Mexico families more money by passing this bill than the big increases that you all made to the working families tax credit and low income comprehensive tax rebate these last couple of years, and at no cost to the state. Because Voices for Children champion both the working families tax credit and LICTR, we're especially glad to see that tax refund loans are included in the bill. In 2020, New Mexicans paid over $2.5 million in fees and interest to tax refund lenders. Most of those had APRs near 175%. That means those lenders are taking advantage of the absolute highest rates.
Thank you, Mr. Jordan. I'm sorry, your time is up.
Melissa Martinez.
Hello, thank you everyone, Chair, especially Representative Herrera. My name is Melissa Martinez. I speak out as a citizen, but also as a former employee of these predatory loans. I am not an actor. I am a person that stood in the front lines to listen to the stories of these people in desperate need. I feel that it is not necessary to raise that interest rate on an individual like myself, a single income household, a mother trying to just survive during the pandemic while your child is sick. There is necessary items to go over that. Yes, New Mexico needs more effort in local loaning. Local loaning only has the capacity to lend up to $1,000, and most of the extended finances of the income of a household is more than that. Please, I am urging you to listen to us. I went to the top of the totem pole and I spoke to representatives of their company, and they will not lower that interest unless we do. Thank you.
Thank you. Next.
Patty.
Hello, committee. This is Patty Williams. I'm the registered lobbyist for the Navajo Nation Council Office of the Speaker, and I'm speaking in support of House Bill 132 as the Navajo Nation has supported its myriad progeny for over a decade. And we've heard the same arguments against each bill, each session for years and years. The Navajo citizens of New Mexico often fall prey to these lending practices. And interestingly, we have never heard a justification for loan rates over 35%, and it has not been put forth today. Please give this bill a due pass from your committee. Thank you.
Rachel Biggs.
Good afternoon, Madam Chair and members of the committee. My name is Rachel Biggs with Albuquerque Healthcare for the Homeless. High interest rate loans too often have devastating consequences for families in New Mexico. We see firsthand how high interest loans contribute to financial distress, resulting in eviction or foreclosure, and then trapping families in a cycle of debt that keeps them from exiting homelessness. Financial debt both creates homelessness and prolongs it. It's well past time to cap small interest loan rates at 36%, and we thank the sponsors for their tireless work and commitment to addressing this critical issue. We urge your support of HB 132. Thank you.
Thank you. Next.
Lon Senna.
Thank you, Madam Chair, members of the committee. My name is Lan Sana, Policy Director for the Center for Civic Policy. We stand in support of House Bill 132 and thank the sponsors for this legislation. I won't go into the stats that Representative Herrera already spoke on. However, I do want to talk to how the pandemic has particularly hit communities of color the hardest, and they should not have to turn to triple-digit interest rate loans to meet basic needs. Fair loans are available after implementing interest rate caps and can be a reality for New Mexico. I urge your support in passing House Bill 132.
Thank you. Next.
I apologize. I'll probably mess up the name. Othiamba Umi, AARP, New Mexico.
Thank you, Madam Chair and members of the committee. My name is Otiamba Umi, Advocacy Director for AARP New Mexico. We advocate for ensuring the quality of life of our state's 50+ population and continued independence for these New Mexicans. Major home repairs, extraordinary medical bills, and many other circumstances exacerbated by the pandemic have forced many to seek financial assistance and resort to these high interest loans. ARP believes in strong consumer protections that help prevent borrowers from being taken advantage of, where they may end up in debilitating cycles of debt. We urge you to support House Bill 132 to help protect New Mexicans and their financial security. Thank you.
Rob Trainer.
Madam Chair, members of the committee, I'm Rob Trinan, and I'm a consumer protection lawyer in Albuquerque. I've been doing that in New Mexico for 20 years. My experience is that there are national lenders in this area who in depositions and in court pleadings, it comes out that they have a business model to look across the nation and target the places with the highest rates and the most lax enforcement. And New Mexico falls in that category. And some of those may leave the state if this passes. That's true. But there are alternatives. Access to credit will exist for those that need it. The credit unions here, some of them are already doing it. They're extending loans at 36% or less without pulling credit checks. And that void will be filled by responsible lenders if this bill passes.
Thank you. Next.
Diane Sandoval-Griego.
Thank you. Thank you, Madam Chair and Committee, for your time today. I'm Diane Sandoval-Griego. I'm with Guadalupe Credit Union. I'm the Chief of Financial Empowerment. I've worked with the credit union industry for the last 16 years, and we have worked in this field for quite some time, and we offer loans and products and services that address low-income areas. We are asking that the rate be dropped for many reasons. However, my main reason is that we feel that it is an inherent right for people to be able to access credit and financial services to protect their own personal property. We've seen more negative reactions on this than we care to share at this time. But this actually is a problem that has been exacerbated for many years. I ask that our local government stand in our people's defense and remove systematic barriers that keep our low-income populations from building wealth. Thank you very much for your time. And
thank you.
Richard Moody.
Good afternoon, Madam Chair and members of the committee. My name is Richard Moody, and I am the CD1 Vice Chair of New Mexico Veterans and Military Families Caucus and a member of the New Mexico Rural Caucus. As Representative Herrera said, the Military Lending Act protects active duty military by capping interest rates at 36%. HB 132 would help military veterans, retirees, and the New Mexico population in general to avoid predatory lending practices. The Veterans Caucus and the Rural Caucus strongly support HB 132 so that New Mexico protects its military veterans and all New Mexican citizens, the same as the U.S. government protects active duty military. Thank you for your time.
Laura M. Montoya.
Good afternoon, Madam Chair and members of the committee. I'm Laura Montoya, former Sandoval County Treasurer and member of the New Mexico Tax Policy Committee. House Bill 132 is a strong step in the right direction against predatory lending and in support of working class families, people of color, young people, women, single mothers, natives, and New Mexicans as a whole. In New Mexico, there's one of these stores for every 6 McDonald's. 85% of these loan sharks are from out of state and prey on our people in their most vulnerable moments. A loan at 175% is 5 times higher than the national average. That's not even the worst part. Fees and interest rates on top of interest are even more harmful. These type of regressive loans only continue the cycle of poverty, endless debt, and ruin people's credit. This, combined with New Mexico being 47th in financial literacy, only deepens the problem that so desperately needs our help. It's our responsibility to protect our families. I urge you to support House Bill 132.
Thank you.
Fred Nathan.
Thank you, Madam Chair, members of the committee. I want to address today the Republican members of this committee directly. My name is Fred Nathan. I'm the Executive Director of Think New Mexico, which is a bipartisan think tank serving New Mexicans. Our board members include former Republican Governor Gary Carruthers, former Chief Justice Judy Nakamura, and former Republican State Party Chair Edward Lujan. Think New Mexico and its board strongly supports House Bill 132. Earlier this week, we met with the executive director of the New Mexico Chamber of Commerce and the Government Affairs Committee of the Hispano Chamber of Commerce, and I'm delighted to report that both organizations endorsed House Bill 132. Predatory lending is reverse economic development. Real economic development brings new dollars into the state. Predatory lending does the opposite. About 85% of predatory lenders operating in New Mexico are based out of state. So the $670 million worth of loans that desperate low-income New Mexicans pay these lenders each year is drained out of the state rather than being used to support local businesses. Thank you for your time.
Rob Black, New Mexico Chamber.
Good afternoon, Madam Chair, members of the committee. My name is Rob Black. I am President and CEO of the New Mexico Chamber of Commerce. Fred stole some of my thunder, but I am here in support of HB 132. Over the last year and a half, the New Mexico Chamber did a dozen focus groups in partnership with the U.S. Chamber around New Mexico. We were in Farmington, Hobbs, Roswell, Clovis, talking about the business case for racial equity. And one of the key findings of that effort and that research project was the lack of access to affordable capital and credit for our low income and particularly people of color in the state and across the country. We believe this is an important issue to properly involve all aspects and all people in New Mexico in our economy going forward, allowing them to get out of very dangerous cycles of debt. We urge your support. Thank you.
Thank you. Next.
Leonard Gorman.
Good afternoon. My name is Leonard Gorman. I'm the director of the Navajo Nation Human Rights Commission. A majority of these lenders are situated near indigenous lands. I spent about 3 hours with a Navajo family last week. It's a grandmother and 2 of her boys that are mentally challenged. Grandma tells the story that this is a very hurtful, unsafe lending opportunity that her family got engaged in. She lost a lot of money. She lost her property. She put on pawn her jewelry. She is almost naked with her property and she can't pay off the loan. That's how bad this thing is. People say we're helping. This is not helpful. This is very, very hurtful. Support HB 132. Thank you.
Thank you. Good timing. Next person.
Austin Wiki, NM Native.
Thank you, Madam Chair and committee members. My name is Austin Wiaki. I'm here on behalf of NM Native Vote, and we stand today in strong support of HB 132 because we understand that these loans are targeting Native people. All you have to do is take a drive around Gallup, Grants, Espanola, Farmington, or the International District to know that this is an issue of equity. We know that these lenders are targeting our poorest communities. We know that they're targeting communities of color, and we know that they're targeting communities with the least access to financial literacy. Every year we hear over and over that New Mexico is a poor state, and over again, the state legislature allows out-of-state companies to operate in New Mexico, charging hundreds of millions of dollars in interest alone from our people. We have an opportunity here in New Mexico to do the responsible thing and pass a 36% rate because both opponents and proponents recognize that 175% is a problem and because complacency is causing harm. Because 36% is just more affordable than 175%, and because nobody in New Mexico, regardless of their background, deserves a predatory 175% loan. Thank you.
Thank you. Next.
Bob Carroll.
My name is Bob Carroll. I'm a Marine Corps veteran and a member of the Veterans and Military Families Caucus. For the reasons Representative Herrera and others have put forth, I'm here to support the passage of HB 132. The Act recognizes the predatory nature, the Military Lending Act recognizes the predatory nature of high interest loans. My concern is that the committee will compromise to a 99% loan or something that is equally predatory and doesn't protect people. The 36% loan is that established in the Military Act, and that we have established in our neighbors in Colorado and Arizona. That should be the cap on the payday loans. Thank you very much.
Thank you. Next.
Anna Porter.
Good afternoon, members of the committee and Madam Chair. In 2017, Prosperity Works brought to the state an alternative product. It is called True Connect. It's an employer-based product, and during the period of time that it has been adopted by employers across the state, over $11 million has been loaned to over 55,000 New Mexico employees. In this time, they have repaid their loans were at 20%, and there's only been a 2% default rate. With this, what we have done is not only provide access to loans, but demonstrate that that it can be below 36% and people can have access. We urge your support for HB 132.
Thank you. Next.
Sylvia Fink.
Good afternoon. Thank you, Madam Chairman and committee members. Sylvia Fink, representing AAUW New Mexico members. Representative Herrera, we thank you for your persistence. AAUW New Mexico's members continue to support reducing the 175% usurious lending rate to 36%, currently with House Bill 132. You have already heard the facts and rationales from others. We support a due pass for HB 132. Thank you.
Thank you. Next. We have time for just a few more people if you want to be quick.
Michael Doyle.
Thank you, Madam Chairwoman, members of the committee. I stand in strong support of this bill as well. I'm a workers' compensation attorney. I see these companies, predatory lenders, targeting my clients, and the Workers' Compensation Act in New Mexico is designed to help workers get back to work and to survive while they're off of work. The predatory lenders lend at these high rates, take advantage of these workers, and when the workers finally do get some sort of benefit for their injuries, they end up having to pay that all to pay off these loans. I stand in strong support of HB 132. Thank you.
Thank you. Next.
Kurt Rager, Lutheran Advocacy.
Good afternoon, Madam Chair and members of the committee. I'm Kurt Rager, the Director of Lutheran Advocacy Ministry of New Mexico. I do hope you've had a chance to read a letter sent to you from 18 denominational leaders from the New Mexico Conference of Churches. We're here to offer our strong support for HB 132. All the rational and reasonable arguments have been made on this issue, and therefore we won't prolong you with any more arguments. So we support this bill. We urge your support, and we're grateful for the unwavering support on this issue from Representative Herrera and the other sign-ons to the legislation. Thank you.
Next.
Beline Peters.
Thank you, Madam Chair, members of the committee. Beline Peters, Job New Mexico. I had a job that wasn't paying me enough. And then pay me enough, I had to end up falling to borrowing from a loan company. I do have a son, so I had to do something for us to get by. I took out the loan to help me pay towards bills. It helped, but it did not help knowing it's another bill. Having to adjust financially to the loan, also getting groceries, essentials, basic needs for my son and I, just endangering me to make car payments. What I did not like is that loans took money out of my bank account, and I found out later it's against the law for loan companies to do this. The payments toward loans do not seem to get any smaller, making payments to it. These loans not only affect me, but others as well, families, the community. It's just too much of a high amount for loans.
Thank you. I'm sorry we have had the time allotted for the different public comment. We appreciate everyone being here, and we're going to need to go back to the committee. So with that, Representative Herrera, knowing our time, did you have anything else you wanted to quickly add before we go to questions?
No, Madam Chair.
Thank you. Okay, I see Representative Thompson.
Thank you, Madam Chair. And I want to thank the sponsors of this really, really, really important bill and all of the public who spoke up. It's heartbreaking to hear the stories, but and I am in full support of this bill. I'm just on here to say I wish we could make it even lower than 36%. And Representative Herrera, you can join me in the stubborn caucus. We keep bringing our bills until we get them. And people need to learn that we're going to keep on doing these good things for New Mexicans. So thank you all, to you and to all your sponsors. Thank you, Madam Chair.
Thank you. Representative Pettigrew.
Thank you, Madam Chair. Madam Chair, I want to start off with a point of order. I would like for permission, Madam Chair, for Representative Romero to take over her role as parliamentarian and as the chair of rules, and give a position on the fact that I just moved for an amendment and we just passed one that took the appropriation out, and this no longer meets the call of the governor.
Madam Chair, Representative, if I may.
Thank you, Matt. Thank you, Madam Vice Chair.
Thank you, Madam Chair. So Representative Pettigrew just asked if this bill is still germane, given that the appropriation was stripped with the addition of the amendment. That said, it's a great question, and it's certainly a parliamentary procedure wonky, in the weeds sort of question. But in a 30-day session, the general practice with any bill that has an appropriation is that it's deemed germane. Following that, if the appropriation is stripped out, hopefully it's for good reason, being that the appropriation made it into House Bill 2. So it's been standard practice to continue these bills on, being that they were already deemed germane at the beginning of when they were read in by the speaker. And so they continue to move forward. And essentially that's been the standard practice. I appreciate the question and believe the bill should continue.
Thank you, Madam Vice Chair.
Perfect. Thank you very much for that. Madam Chair, I have one question. Presenters, I am curious. This started as Senate Bill 66 for my history, because I've only been, this is my second session. Started as Senate Bill 66. It came across on the House floor. There were amendments that passed the House. Why does this bill, Madam Chair, not include the amendments that made it through the House in the 60-day session? Thank you.
Thank you, Madam Chair. Thank you, Representative. It's a great question and one that I really struggled with. When I first introduced this legislation taken over from the Senate, I was always in favor of 36% rate. I'm at the age, Representative, where I try not to let the perfect stand in the way of the possible. And I carried those amendments to the floor and did my best to get it passed, hoping that when we got to conference, we could probably, maybe, possibly get a lower rate. The Senate didn't agree to go to conference, and that's pretty much where it stood. I've always been in favor of 36% rate, but really, I was trying to get any rate lower than what it is, and that's what I did.
I appreciate the honesty and the answer. When it went through CPAC last year, I voted against this bill, and right now I still stand in that same position. I look forward to seeing what happens as you progress, as I'm sure you will. And I'm not opposed to repairing the issue that exists. I'm just not sure this is the right solution yet. Thank you.
Thank you, Representative. I appreciate that.
Representative Lord?
Yeah, thank you, Madam Chair. I apologize, I'm a little frazzled. My husband went outside to go take the trash out and slipped in black ice. So I just had to do a trauma assessment on him real quick. So just bumps and bruises, no concussion. So I apologize if I missed my question I'm about to ask, which is, Madam Chair, Representative, I remember this bill went through before, and this is the copy of the Senate side of that bill. But I thought there was an amendment, which I have right here last time, that everyone agreed upon. And I apologize, I didn't know if you asked this question. Like I said, I was just doing an assessment. Is there a reason why you brought back the carbon copy of the Senate bill without the amendment as last time?
Madam Chair and Representative, yes, there is. I just told Representative Pettigrew asked the same question, but it's because I was always for a 36% rate. I mean, that's where I started. It was amended, and as I told him, I'm old enough to not let the perfect get in the way of the possible. And I appreciated the vote in the House. I was trying to get to conference. The Senate decided not to go to conference, and that's really the reason why.
Okay, yeah, I apologize. I just, like I said,
No,
I
it's
didn't like that moment. Okay, so because I think my understanding is that there was agreement on the 36, except for that small fraction of high risk, no collateral loans that they wanted to do at 99%. Is that correct? Is that what the amendment?
No, the bill is passed in the House, said that loans over 1,100, and there was bipartisan support on this bill. Loans over 1,100 would be at 36% rate, and loans under 1,100 would be at 99%.
Okay, that's what it was. Yeah, okay. And
Yes.
that was with this amendment, correct?
Well, there are a lot of amendments, but yeah,
Okay,
that's
so-
how the final bill ended up.
Okay, so I guess what I'm getting at is, I think what I'm understanding, this would be the last question, I'll wrap it up, is that there was an agreement with everybody, including the loan companies on the last bill with the amendments, with the 99 and the 36, and that was all good and everybody was in agreement, or am I wrong on that?
Oh, no, Madam Chair, there was still a lot of debate. People on the right and left were, uncomfortable with it. I mean, there are several loan companies that didn't want any lowering of the loan rate. There were advocates that wanted to keep it at 36. So I'm just saying it was always a hot mess.
Right.
It's just what goes with this kind of legislation. There are advocates on both sides that feel very strongly about this bill.
Right. Okay. And thank you. I appreciate all that. And that's going to be it. I understand why we want people to have access to loans. At the same time, I'm trying to figure out balance, right? I don't want the loan companies to go out of business. I want people to have access to get money when they need it, but it is a very high rate. I don't have an issue with the smaller amounts being at a higher rate. And that's all I had to say. Thank you. I'm going to go back and after we vote, go check on my husband again. Thank you.
I hope he's okay. Thank you, Madam Chair. Thank you, Representative.
Thank you.
Okay, is there?
Madam Chair, I move a do pass.
Thank you. As amended.
I will
As
second
amended.
that, Madam Chair.
Thank you.
Okay, there's been a motion for a do pass on House Bill 132 as amended. Is there any opposition?
Yes. Yes.
We'll take roll. I'm sorry. I was
Yes.
Okay.
not thinking.
It's okay.
Representative Lord.
No, but with an explanation, please.
Representative Pettigrew.
No, and I've already explained where I stand on this. I'm good.
Representative Thompson.
Yes.
Vice Chair Romero.
Yes.
Madam Chair Ferrari.
Yes.
3-2 do pass as amended, Madam Chair.
Thank you. And Representative Lord, would you like to explain your vote?
Very brief. Thank you for that. Madam Chair, Representative, I'm going to do some more research on this, and hopefully I'll have some more answers by the time it gets to the floor. That's all I want to say. I'm not opposed to lowering the rate. I just want to do some more research on it. So thank you.
Okay, thank you. Representative Pettigrew, did you have, you said you already had explained, right? Okay. All right. So on 3-2, you have a do pass on House Bill 135 and as amended.
Thank you. Thank you, Madam Chair. It's 132, and I appreciate
132.
Time. Yes.
My astigmatism changes these little numbers.
No problem. Thank you all very much.
Thank you. Okay. Next, we have House Joint Resolution 8, create an Office of Consumer Affairs as a constitutional amendment. Representative Eli.
Thank you, Madam Chair, members of the committee. Nice to see you again today. So I want to give you a little background about